How are you gearing up for Christmas?
Well, I feel as though that we're gearing up. It's been a wonderful year as far as the markets. Stock indexes have been outstanding from Australia to India to China to the US. Everyone's had an uptick. It's been absolutely a wonderful time to be long on equities. And we feel as though that probably momentum will go into 2020 and the new decade and play very favourably for all the traders. So it's been onward and upward, and we feel as though that the next decade is going to be an exciting time for not only the investment market, but certainly mankind in so many new technologies being introduced to the market.
Um, Absolutely. So Peter, just continuing on that, then what should we watch out for? When it comes to crude in 2020, it seems to have been one of the better asset classes of 2019. What's the forecast then for the new year?
Well, I feel as though you're probably, Brent, I wouldn't be surprised over 2020 to be, that early $70 has got the capacity to be there. I feel as though that the US dollar will come off a little bit over the next matter of months. And then the momentum to the upside, unless something dramatic happens from a geopolitical stance, I feel as though that the traction will take it towards that 70 or early 70s. And then the unknown is, where does the market play in the foreseeable future? We've got presidential elections this time and next year. That'll be, 2020 is going to be fascinating from a US election side. We've got Brexit, and that's still working through. We've got the Elasoplast deal of phase one of the trade deal that's now been put to bed, and then there'll be more works in progress over the next, 90 to 180 days. So I feel as though that will all play nice and handily and well for the crude market.
Peter also wanted to understand. I know, it's very difficult to predict and no one can really tell what's going to happen tomorrow, but it's been pretty eventful if you talk about just the geopolitical factors across the globe, which has impacted crude prices. I mean, everything from the attacks on the key oil producing facilities in Saudi to US turning up into a net exporter of oil, continuity in the planned reduction of output by OPEC, etc., etc. Which dynamic do you think is going to impact crude most come 2020?
Gee, that's a hard one. I mean, look, I feel as though that in a lot of ways it's got to be the US side, I think, as far as production. And I think there's, market analysts are saying that you're going to see, again, further increase in production, which in turn is going to be a handbrake and going to upset naturally OPEC and the other large producers globally. So I think that's the main draw card. I hopefully we don't see geopolitical shocks, but it's not unusual in that part of the world. But I feel as though, yes, the US production would be the wild card, which it has been demonstrated over the last 3 to 5 years.
Also, just looking at, the kind of factors that are going to really influence crude in 2020, and these are again from research notes as well. The US presidential elections too, Peter, I think are going to have a big bearing on which way the crude actually moves. And I'm just looking at some of the notes which are calling the range for Brent at about 64.5 to about 63 odd dollars to a barrel. Do you sense that that's where we're going to spend better part of 2020 in that sort of range?
I think it'll be higher than that. I feel as though it's got the capacity to be that high, a higher 60s number. Many of the analysts are saying that even to the early 70s. And the reasoning is quite simple. I think that the US dollar will continue to probably have a little bit of a correction to the downside. The next part, of course, is growing consumption and the general global economy. I think inflation will probably kick off in the next matter of a year or two. And I feel as though that the undercurrent there is going to be higher for energy prices. I know they've had a nice 2019, but I feel as though there's more upside for 2020. And I think the commodity boom, in a sense, will reignite.
Okay. Any concern on the fact that despite the output cut, there are some murmurs that there are pockets of the suppliers that are continuing to kind of keep the supply at elevated levels. Given the imbalance that we're now seeing between the traditional suppliers and the new suppliers, Peter, do you see any merit in that?
Well, a few years ago, 5 to 10 years ago, we didn't worry as much about Russia, and now look at it. It's that and the Saudis vying for, and the US, the largest producers. It's as the globe becomes, the demand for energy is only increasing day on day with population base growing, and naturally the consumption patterns increasing from electricity consumption all the way through to fuels and diesels and petrol and so on. Then there's going to be an undercurrent there as far as more consumption, and the framework hasn't gone away either, because you've got these large producers that are vying for, naturally, to shore up their own balance sheets, and from the likes of the Saudis with Aramco now and so on. I think most producers have had a very quiet time over the last 4 or 5 years with profitability, and they're wanting higher prices. So I think the trade-off's going to be consumption. You'll have to pay more for fuel, and it's going to be an interesting debate. Who is controlling the majority of the market? And I'm not sure whether OPEC's going to be in the same position in 10 years' time of what it is today.
Everyone is counting and making this prediction on the basis of the fact that they see demand recovery coming in on the back of global growth, particularly with the trade truce now having been set. Any kind of spanner in the works that we could potentially see, or are you also convinced that we are now going to see a better 2020?
I think we'll see a better 2020, but I don't feel as though that the issue's gone to bed as far as Brexit, and that'll be an interesting 60 to 90 days leading into the first quarter, because it'll be interesting how the Eurozone plays Boris Johnson and where does President Trump play Euro. So that's, I think, going to be a very, very, I think President Trump will go, I wouldn't be surprised to see some form of tariffs on auto sales, and that is going to be how Europe retaliates. I feel that's going to be the next lens that Trump looks through, and I think 2020 is going to be a tough year for Eurozone when you're looking at trade talks and so
on. Peter, I wanted to understand about crude, and I know you've spoken about it. But, when we just talk about crude, you think one of the reasons for that being, one of the best gainers in 2019 has also been, the depressed valuations that it had been at for the last 2 or 3 years, or, 3 or 4 years constantly, it had seen a downturn?
Absolutely. It got hammered to the downside. At the same time, you had an increase in production coming out of US shale, and there was a pretty bleak time to be a producer. So that was like any market, it's cyclical, and crude is now gaining a little bit more headway. But yes, if you look over the last matter of 3 to 4 years, it was a pretty tough time to be a producer. And the global growth over that period of time has been quite extraordinary if you look at equities. And, naturally, at that same time, you've had the ratcheting down of interest rates globally. So that's all going to play very favourably for producers, because they're able, as far as capex spend, be able to borrow more, and as far as production, and the next part of it, of course, is that growing consumption from the user base. And I think that's where 2020 and 2022, 3 and 4 are going to be very, very dynamic years for that whole commodity sector.